The broadcast is now starting. All attendees are in listen-only mode.
All right, doing a quick audio check. Can everybody hear me? All good. All right, sweet. All right, well, with that, let's get started. By the way, if you have any questions or need any help, we have different people that are on that can see your questions. So if you get stuck on something or if you're stuck anywhere, let us know, and we'll be able to help you out right away, okay? So let's go ahead and get started. So be the sniper or be the target. Which one are you going to be? It's your choice, right? You got to make it today. And hopefully a lot of y'all have learned how to be the sniper. So standard disclosures, know what you do before you're doing it. There's risk involved, only use risk capital, etc. All that fun stuff. So we got Bootcamp going on. So it's free and it's going now through December 4th. Okay, again, now through December 4th. You do not want to wait till the last day because, well, it ends then. So you want to make the most of the time. You just go to ApexInvesting.com/bootcamp and you sign up. If you're a member, sign in first, then come to this page and sign up. Okay? And you just click sign up, you fill out the form, and then you'll go back to ApexInvesting.net after you filled it out, and you'll see the link to be able to access Bootcamp. So I'll do that real quick and sign in for you so you can see that. Waiting on it. It's coming. There we go. If y'all have noticed, we do have this handy little chat feature down here. So we try to monitor it as much as we can throughout the day and help you with questions. So when you scroll down, you'll see once you've signed up, you'll see click here to access Bootcamp. You click there. And then this is a big thing. Make sure you do read this text, okay? It will save you hours and hours and hours and hours of frustration. And so you're going to start, you're going to watch the fast track video. It's going to explain everything to you. You're going to register for all the webinars. Then you're going to take and do the training. Only takes about 20 minutes on setup 1, 20 minutes on setup 2. That accounts for 85% of our trades, by the way. Then there's a cheat sheet that you can download. There's some live trade examples of trades. And I hear this question, where's the elite room? Well, it's because you didn't watch the welcome video, but we put a big red button to make it easier to find for you. And so if you click on that and open it up, it will now take you into the elite room, which we also added a nice new shiny red button. So that way you'll be able to see right where to log in. Okay? If you do get stuck on anything, you can call our phone number at 888-946-2739, extension 3. If you get stuck on the elite room, that number goes directly to Hotcom. They can't help you with anything else. We can help you with anything else, but hit extension 3. And if they don't answer, either they're helping somebody else or they're closed, leave a message. They will call you back. They will help you out. I promise. Okay. They are fantastic. Then we got how to set up NinjaTrader. And here's what happens. People download Ninja 8. They watch the first part of the video where they just skip the video and click the download link. And they don't go and see how we tell you to set up the instrument and the templates. And then over here, they install the toolkit real quick, but they don't see how to set up the templates, the workspace, all that stuff. And then they go to step 3, they set up their ATM. Step 4, they download their order prints. But they don't read that it says that it's only updated as of the 17th. So you won't see any data before the 17th. We update it every Friday. If you need a newer file, just hop in the elite room and ask us. Okay? Then we got setups 3, 4, and 5. The webinar recordings are right down here. So webinar 3 will be posted here for you. Okay, so everybody ask, where are you going to post the webinar recordings? Yes. And then if you need to know about futures, Forex, touch brackets, e-micros, whatever, we got you covered. If you want to know about money management, order types, personality of traders, things like that, then you're covered right there. And then if you're ready to sign up, which next week we're going to be starting our big promotion for you. So we're going to have a big Black Friday sell, so you'll want to check that out. Okay, and that's pretty much it. Um, and then let's see here. Trader asking, can the trade room be viewed on an iPad? Only if your iPad is using TeamViewer and your TeamViewer is also on your computer, so that way you can log onto your computer with a free app called TeamViewer, which will allow you to view your PC. Okay? Let's see here. So, Jim, that would be correct. All right. Now, sorry, didn't repeat the question, but he basically said that he could trade the minis with a little $2,000 for funding an account. Yeah, you can do that. So micros, you need 400. All right, so sign up, see if it's for free, trade it for free. Okay, and our goal is for you to be profitable during that time. And if you want to go in and you want to see what people are saying, hop on over to our forum at forum.apexinvesting.com and check out the, you can do this in Why You Should section, and you can see what other people are saying about this, okay? After December 4th, if you haven't signed up, then you won't have access anymore. So a lot of y'all are already in Bootcamp. In fact, 750 people, 760 something actually now, have enrolled into Bootcamp, and I am calling every one of you personally, and I have called out 350, 400 so far. I only actually reach about, a fourth of the people on the phone, but I do leave a message to let you know, and if you want to talk to me, you can always call back. And then, like I said, we revamped it to make it fast track. So literally, if you will follow the rules on that Bootcamp page, you can be in the room in an hour and actually understand what you're seeing and what you're hearing. If you just hop in the room, but without following the rules, without going in order, then you're going to be lost and you're going to feel like you can't do this. So don't just jump in the room. Wait until you've at least got through the steps before that webinar room link comes up. 30 minutes after you've got in the room, you can be set up on NinjaTrader. So literally an hour and a half is all we're talking for you to get set up and going. So you definitely want to check it out. And I just showed you how to access the room. So very easy to access it. Just make sure you access it after you've done the training before it, or else you're going to hop in and be intimidated. I've already seen people hop right in because they hear that we're doing so amazing inside the trade room, and so they want to be in the trade room, but they don't understand what's going on. So, and then they get intimidated. So don't be that person. Let's see here. What else do we got? So if you've not been in the room, then you've been missing out. Scott just posted my second day in the room. I lost count of how many winners I've had. 6 is what I have written down, but I have at least 4 more than that. So, and today we had 5 out of 5 trades were profitable. Yesterday we had 5 out of 5 trades that were profitable. Oh, by the way, Scott wants me to know that was just today that he had at least 6, if not 10 trades that were profitable. If you have 28, actually, last week we had 28 out of 28 days or 28 out of 28, not days. Last week, 28 out of 28 trades were profitable. It's $1,400 minimum, and that's if you only took the minimum $50 profit per trade. And this is just in a couple hours in the morning. Okay, so again, just a couple hours in the morning. This is not trading all day long. Now, we have people trading at night too, okay? We have people trading at 3 a.m. It's actually one of our highest peak times where people hop on in the Euro session. So now there are going to be a lot less traders, but this doesn't even include all the trades that happen all day and all night. This is literally, we'll hit 3 to 5 trades in the first 15 to 30 minutes of trading. So it's been pretty amazing. This was today. So today, and again, if you're new, you're not going to understand all this. Don't worry about it. You'll get there if you go back, okay? But and remember, the webinars are a little bit more advanced, but we also like to take you to another level on the webinars versus the education that just is on the site. We had an X box, which is a red box with a trapped order, which is that blue thing inside of it. Right there, profitable. Then we had another X box with a trapped order, that blue thing inside of the box, that red box, profitable. Then we had another X box with the trapped order inside of it. Now, this was going with the trend, but we had what's called trend divergence. We went lower than before on less volume. This right here had 16,000 volume. We only had 3,000 volume. So we went lower on less volume. And so we were able to fade that trend. And again, another profitable trade. Market came on back down. And we had a star with a low volume score with a ZOI. That's a setup 4. Okay. And again, profitable. And then we had a triple dipper, and we called it, and we said, it, we're looking like we're going down to settlement, but so a nice, good trade right there that was very profitable. And then we had another divergence, 10,000 volume, 8,300 volume. So lower volume on a lower price. Another Xbox with a trapped order inside of it. This is, by the way, setup 2, profitable. Then we had another triple dipper, which is setup 1. And we called it, we said, hey, it's going to settlement. And right there, went down, went on to settlement, another profitable trade. That was literally our first 30 minutes of the day. Okay? So, and we have people trading futures, trading micro futures, and trading Nadex as well. And I will show you what all the ZOIs are and everything here in a little bit as we keep going forward. So I want you to stop for a second and have a reality check. Just in the room, that's almost $2,000 in 7 trading days. Literally $2,000 in 7 trading days. And it cracks me up because people come in and they're like, I don't know, I want to use NT8. We're working on NT8, but our stuff has some pretty complex algorithms. We use our own engines. This isn't just some indicator that plots on a chart. And they're worried about the version number of a platform. $2,000 in 7 trading days, trading just an hour and a half, just trading a single contract, just going for $50 a pop. Where are your priorities? Do you want 8 or do you want to make money? And how's that working for you, right? And this is just trading on NQ. So, and we are going to talk about other markets at the end of Bootcamp, but this is just focusing just on one market, just on one chart. After Bootcamp, it'll only be $200 a month. So $2,000 in 7 days, and it's going to only be $200 a month. That is not bad at all. If I offered you $2,000 to sit and watch a movie, would you do it? Because, I mean, well, we have some people that won't sit down and watch 2 hours of training so they can understand what's going on and start making part of that $2,000. And, I talk to people all day long with issues and questions, and almost all of them are due to simply not watching the first 2 hours of the training courses. And they've missed out on a lot of profits because they've spent days trying to figure things out that were covered. So I'm just trying to give you a little bit of a reality check. If you try to cut corners, it's going to take you a lot longer than 2 hours. Why cut corners? It's literally 2 hours. Why spend days confused cutting corners? And one of my favorite sayings is the longest distance to a destination is a shortcut. Okay? So take those 2 hours so you can make potentially that $2,000. Those that have been very, very happy. There are still a full 2 weeks left in Bootcamp. If you want to invest 2 hours in yourself to educate yourself, then should you be investing your live money anyway? Right? And you shouldn't have any paralysis analysis of these setups because they are 100% defined. If you won't click a play button, should you be clicking an order entry button? I'm just, again, giving you a reality check. So be honest with yourself and ask, is trading really for you if you're not willing to spend 2 hours to learn how to trade? So if you're serious about trading, then 2 hours should be a no-brainer. If you're not serious, then you're a gambler. A gambler looks for shortcuts. A trader invests in themselves and educates themselves. So I really just want to encourage you to stop, get serious, spend 2 hours, and follow the path. Then make the most of the next 2 weeks. We did that in the last, 38 for 38 trades now? We did that in the last 7 days, okay? So you have plenty of time to make the most of the next 2 weeks, but you need to start right now. So the first video is only 20 minutes. The second video is only 20 minutes. So there are very few videos that are actually an hour long unless they're a webinar or in the foundation section. So it literally only takes 2 hours, Jim. some tips and troubleshooting to help you make the most out of the next 2 weeks. Let's talk about that. So again, we got the new fast track training, just 2 hours. And we also have, a lot of people are using the wrong contract. You should be loading right now NQ1219, okay? And that's NQ1219. So if you have like NQ912, well, that's NASDAQ September 2012. It's not going to work for you, okay? Only load 10 days of data. If you try to load 125 days of data, this algorithm is very intensive, and it's going to just go take a bath and go eat breakfast and come back an hour later, okay? 10 days of data, it'll load up in a few minutes. There is not going to be historical order prints on your chart, okay? So again, there's not going to be historical order prints on your chart unless you download the historical order prints, okay? And then it'll only be from Friday back, or unless you ask in the room for the latest order prints file. For those of you who can't find the room, I just showed you where the room was at the beginning of the webinar. It's got a big red button, another big red button, and there's an 800 number in case you have an issue, okay? This is a big tip. So when we're in the room in the morning, people, we have a lot of alerts to help you stay awake and know when to look at the charts. But they get distracted because they're trying to listen to me talk, or, because I'm talking live in the room, Lori's talking live in the room, and they want to turn off their alerts. Open up the mixer and just silence your Ninja. And then turn it back on. And that will save you, so that way you don't have to hear the alerts. But if we're not talking, I do recommend having it on so it does keep you focused. If you have a Mac and you want to trade, you need to get Bootcamp. It's free. So you ought to know how to download that. If you don't, hop on and just search Mac Bootcamp and download it. And what it does, it lets your Mac boot up as a Windows computer. Trading is built on, ones and zeros. Windows is built on ones and zeros. Most of the best trading software is built on ones and zeros. You're going to need to use Windows. But you don't have to go buy a PC. You can use Bootcamp, and it'll use the full resources of your computer. Now, Ninja. So some people may have missing instruments, so you need to add the right instruments. We covered that in video 1. We're going to go into that. We're going to go to how to fund an account and timeframes. Let's see here. And let me check something real quick. Yeah. All right. So make sure you have the right instrument loaded. If you want to fund an account, go ahead and just hop on over to Ninja Brokerage and fund an account. Okay. It's not hard. It only takes $400 to fund a micro account. If you want to trade minis, you're going to need like $2,000, $3,000, $4,000, $5,000 in the account. Or you could trade touch brackets. This is going to be easier if you trade micros, in my opinion, but it's up to you. So micros are 50 cents a tick, minis are $5 a tick, and we're only going for 10 ticks. Now you can do multiple micros, so you can make it, $1 a tick, $2 a tick by doing like 4 of them, whatever. Connection issues. When you load up your NinjaTrader and you set up your demo feed, make sure you have the demo button selected. In one of my videos, I don't have it selected. That's because I'm not using a demo feed. So make sure it has the demo checked on the section of Ninja where when you're going in and you're setting up your connections, that button is checked or else it won't work. So, Chart Trader. Now, if you have funded an account, you will need to have NinjaTrader, actually a leased or bought version of it, to use Chart Trader and to use ATMs. If you're just doing demo, you're not going to have to worry about it. You don't have to pay anything. But if you're ready to trade live, you don't just want to use their free version because it won't let you use the ATMs or the Chart Trader. Okay? It only takes one trade flying against you from a Trump tweet because you didn't have a stop order put in place to more than pay for NinjaTrader for many, 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 many years over. So don't be cheap and just get it, okay? You can lease Ninja or you can buy Ninja, okay? Just like we have it where you can do monthly or you can do semi-annual or you can do lifetime, okay? Well, they have several options as well. We're about to go over those. Contact Ninja with any questions you have about their platform and what the costs are, but I'll go into what they are right now. And then again, you're going to get access to ATMs, which is where you automatically set a take profit stop loss as soon as you enter a trade. You get access to be able to trade right off the chart. You get access to the static DOM, which is much better than the dynamic DOM because it actually stays in place. And one of our traders put this in perspective really well the other day in the elite room. I think it's Aaron. And he's like, just one trade a day, 10 ticks. That's just one of our trades. And remember, we get like 3 to 5, and I showed you 7 actually there at half an hour at the beginning of the webinar. We'll pay for all your expenses for the month. We'll pay for Ninja. It'll pay for your data feed, which is anywhere from $7 for just NASDAQ to like I think it's 21 or so for the entire CME. It'll pay for the Apex tools, a couple $100. It'll pay for your internet, and then still leave $500 in your pocket. And that's only if you did one trade a day. Okay? Like, that's something to really think about. One trade a day, you still net $500 in your pocket after any fees that you're paying. So there is the free platform, but again, it won't allow you. Now, the demo platform you have access to, okay? Free platform won't let you use Chart Trader, won't let you use ATM, won't let you use static DOM. The lease and the own let you do that. And by the way, the lease and the own give you lower commissions. So if you own it, you actually get the lowest commissions. So there are different choices. You can do a quarterly payment, or you can do a semi-annual payment or an annual payment. What I suggest that most people do, unless you just have the cash, is do the quarterly and let your trading pay for the lifetime. So if you have the cash, pay for the lifetime. Okay? They also have an option of 4 monthly payments of $329 if you want to do that. But $225 is going to cover you for 3 months. It's like $70 a month, but you pay $225 to cover the quarter. And again, one trade a day more than covers and still leaves money in your pocket. Now, we have, if you want to own Ninja Trader for life, Ninja Trader 7, Ninja Trader 8, then you can go in, and this offer, I talked to Ninja Trader, and I got a discount. They only give discounts on the lifetime license. And this is good through Friday, December 6th. But if you will email platformsales@ninjatrader.com and put in Ninja Trader vendor discount -Apex Bootcamp, okay? Then they will cut $100 off a single broker license or $200 off a multi-broker license. So unless you're trading Forex and futures, you probably only need a single broker, okay? If you're trading both, then you could do a multi-broker, and they just make you pay the difference when you upgrade. But they'll give you $100 off, so it goes down to $9.99. And that's if you want a lifetime. You also, again, could just go in and do the quarterly. But I asked them if they give us some sort of discount, and they gave us basically, $100 off, which is, pretty cool. But you have to email them and let them know and use this discount code, okay? Please contact them or us with any questions. So on Thursday, we're going to cover trade number 4. We're going to talk about how to trade with small accounts like micro futures and touch brackets. I'm also going to do a big Ninja Trader overview. I'm going to go into ATM. We already went into licenses. I'm going to go into DOM. I'm going to go into a lot of tips and tricks, how to move around Ninja, things that I do, how to change colors, just, all sorts of little Ninja things that I think will help you out a lot. And so a lot of y'all are new to Ninja. So, and if you have a lifetime license, the question is, no, it actually carries from 7 to 8. It works on both. But I'm going to, basically do a whole overview of Ninja, but also dive into trade 4, which is one of the biggest, most profitable trades out of the 5 trades, as far as it usually runs much further. And then again, for those who have smaller accounts that want to look at micros and touch brackets, I'm going to talk about those. So let's talk about the 7 steps to sniper trading setups, because we're diving into setup number 3 today. Identify the target. I had one person I talked to today, and she's like, I'm just sort of having trouble identifying the X boxes. And so you really got to you have to be able to identify them. Identify those X boxes, identify the trapped order inside of them, like for setup 2 as an example. Identify the pattern. So what has to happen? A reversal bar or this or that or whatever, okay? Identify the obstruction. Is there anything in the way of your trade? And I'll show you an example of that later. Identify the entry. Where are you going to get in? Where are you going to get out? Where do you need to take profit? and identify the opportunity of, hey, it's going down to settlement, or it's going to this wall or whatever. And we talk a lot about that, more about that in the room. But we're also going to talk about that tonight. That's going to be a big subject after we get through setup 3 tonight, is we're going to go into walls. Okay? So setup 3, mini magnets and paws on the same bar, and they bounce off an existing zone of interest. Does not have to be a reversal bar. It's the only one of all the trades that does not have to be a reversal bar, but they bounce off an existing zone of interest. So also known as mini magnet, paw, zone of interest. Existing, meaning it's been there for a while. Okay? Also, you can have mini magnet, paw on the same bar when there was a zone of interest on the bar before. So it could be on the bar before, or it could have been there for a long time, but there has to be a zone of interest. So what is a zone of interest? A zone of interest is going to be one of these levels. And again, I'll talk about these more in detail as we get into walls and levels. But they're either purple or, this teal blue right here. Okay? So that's the zone of interest. So that bar right there came in and had a mini magnet and a paw on a previous zone of interest. So it bounced off of that so it could come through it. There's an entry, there's a stop, 10 ticks later, you take profit. Okay? So right there, we got, and this is actually quite a few things happening. We got an exhaustion box with the trapped order on a reversal bar, but we got a paw, which is the little orange area. We got the mini magnet, which is the white line. So can y'all identify the white line and the orange box? Do y'all see that? White line, the mini magnet, orange box. And can y'all see the 2 zones of interest? So the mini magnet will be fully formed by the time you get in, because you'll get in a tick above the close of the setup bar. Okay? Yeah, that thing grew all the way across the screen. Okay, so let's look at another one, and I'm going to go a little faster, and then I'm going to go a little slower, but here's what I want you to do. Identify the target. Paw. Mini magnet, literally bouncing off a previous zone of interest. Everybody see that? Paw, which is the orange thing. White line, mini magnet, zone of interest. That's it. Okay? Paw, mini magnet, zone of interest. Everybody see that? Paw, mini magnet, zone of interest. You see all these zones of interest going down here? We're looking for this entry. Now notice, again, this didn't have to be a reversal bar. It could have been, but it didn't have to be a reversal bar. So these can be in continuations. Okay, paw, mini magnet, off a ZOI. So there's normally not any instructions on these trades. They usually go pretty far. You don't have to worry about anything. I like to make sure trades have 10 ticks, without running into something. But at the same time, these trades are big movers. Trades 3, 4, and 5 are often big movers. And so I really don't even worry about obstructions on trades 3, 4, and 5. Okay? Identify the entry. The setup bar, that's not a reversal bar, that's a typo. The setup bar is not a reversal bar. I'm going to fix that. I don't even know why that is there. Setup bar is, we'll put may or may not be a reversal bar. May not be a reversal bar. So it doesn't matter. Okay? So you're going to enter 1 tick above or below the setup bar. And again, you don't have to worry about the reversal. There we go. That's easier. All right. So setup bar may or may not be a reversal bar. Doesn't matter. Enter 1 tick above or below the setup bar. Okay? And you're going to go the opposite direction of the mini magnet paw. Okay? So, let's look at them again. Y'all see a mini magnet? You see a paw? You see a ZOI, right? So everybody ought to have that down. Mini magnet, white line, paw, orange thing at the bottom of the chart, ZOI. Enter a tick above, set a stop, a tick below. Okay? Pretty simple. Now, for beginning sniper trading school, boot camp, we say go for 10 ticks. Okay? So think about it. If you're starting out and you're learning to shoot, you're going to start at 10 yards. And then you'll learn, work up to 30 and then 50 and then 100 yards and then 1,000 yards, right? So start out with 10 ticks. Over time, you'll learn, especially as you learn how to read the levels that we teach you and where to trail. Like once it goes up here and breaks up, pulls back, hits that, tighten up there, comes up here, we have another ZOI, it lays a mini magnet, tighten up there, you can learn how to trail further. But first, just target your 10 ticks, and then with time, 10 ticks, 10 ticks, 10 ticks, 3 times a day, if you follow our 6-3 plan, is a 6-figure income plan. Okay? Trading a single contract for the first 3 months. And then only taking 3 trades a day the entire year. Okay? 6-figure income. So check out the 6-3 video or the last one, the last webinar if you don't know about that. So just go for 10 ticks. And then, but you'll see over time, as you see these, that they have a habit of going further. So again, we got a mini magnet, we got a paw, we got a ZOI. We put our stop below it. So I just have it here, but below the bar. Got our entry right above it, grab 10 ticks. Okay. Again, we got a mini magnet paw. Got our entry here. Our stop right above here. Go, grab 10 ticks. Okay? Is that making sense? Hoping it's making sense. So, and all these setups are, and what's cool about the next 3 setups, 3, 4, and 5, is they all involve ZOI. And 4 and 5 are actually the same setup. It's just 5 happens to have 2 ZOIs put together called a crash. So these next 3 setups are actually pretty easy to learn once you realize that they're all just ZOI based. So, all right. So now let's talk about identifying, the exit, 10 tick scalp. Start off with that. Okay. And then these often have room to move 5 or 10 points. Okay. Put your stock a tick below the low of, and we got just little typos here and there on this one. May have to re-upload something. But let's see here. One low of entry bar. So which is about 20 ticks. Consider levels when you're going for more than 10 ticks as profit targets or tightening stops. And we're going to talk about levels here after this. If you're up 15 ticks, you can move your stop to break even +3, walk in a little bit. If it keeps going, maybe once it's up, 10 points, walk in 5 points by trailing up your stop. You can trail with the bar range. You can also trail with the, major levels, as we're going to talk about. Yep, I fixed it. So, action steps. Get your futures account set up and funded now. Okay? Go ahead and just get that done. It's going to take you a few days. You send in stuff, you go back and forth. They're asking you about assets. You need to include every asset you can possibly think of, including that wonderful painting on the wall and your jewelry and everything else. They're not going to ask you what your assets are, but it's what's the total maximum value you could give of every possible thing that you own, because they're just trying to be fiscally responsible. Okay? But get that set up. Begin reviewing these setups and get active in the room. Get them in demo and go live as soon as possible when you're ready. So now let's talk about levels. This is something I know a lot of y'all have been waiting on. What are levels? Why does the market respect and react to levels? Well, there's psychology. There's supply and demand. There's fear and greed. There's perceived value. You know what the number one reason is? Memories. People have memories. of getting stopped out, getting in, getting out, whatever. So memories and stop and threshold of pain and everything else, but there's a lot of orders placed at those levels. So most traders look for levels and they really can't see them clearly. Have you ever seen like a webinar where people are drawing support and resistance and they're drawing all these little trend lines and fibs and everything else? And I mean, basically you just sit back and 10 different people could draw 10 different trend lines in 10 different directions. So very painful task, yes. So the apex edge is all about stacking the odds in your favor, okay? They give you true insight. So player versus casino. Think about it. One is gambling, one is using edges and probabilities. Do y'all think that, you know, major casinos like Caesar's Palace and stuff like that, that they lose money, or do you think they make money? They're playing the same game, right? Same hotel, same casino, same table, same game. And they do lose plenty, but they always net out a profit. Same deck of cards. One is gambling, one is using edges and probabilities. Without Apex order prints, you don't get the edges and probabilities. And once you see it, you won't want to trade again without it. And you can ask people in the room what they say, and they'll say the same thing. I don't want to trade without order prints because it makes everything so much more clear. You know, once you've seen it, it's like trying to drive down a highway 70 miles per hour blindfolded, taken away from you. So magnifying glass. So order prints are your magnifying glass into the bars and the market. They're not just a list of numbers, but they're formulas, they're symbols that tell you what's happening and what to look for. That's the whole target. You identify the target, identify, you know, the pattern. Order flow, which I'm sure a lot of y'all have heard a lot about webinars on or seen free versions of and all this other stuff out there. It's just a bunch of confusing numbers. What we do is our algorithms interpret them for you to help you see the target, see the pattern, to know when to enter and exit. It's great to see inside the bar and see all these numbers, but what are you going to do with it? Versus actually getting, you know, whole patterns set up. So let's talk about some of these things that we actually, you know, and, you know, to give you an example, we go all the way back versus seeing this versus all those numbers, because all those numbers are actually behind this. But that's where these eye zones and paws and mini magnets come from. All right, so let's see here. Institutional blocks, or I blocks. They're large orders that are placed usually by institutional, not individual retail traders. They can be adjusted by market. We have them already set free for NQ. They are denoted by a red or green line based on a block of orders bought or sold. So there's a red block right here. So that red line is ice, by the way. It's something different. So, but there's a red block right here. And there's a big buy green block right there. So you have this big sell. You have this massive buy came in. Market broke through on that a little bit and then back down. But notice how when it did it, it broke it right there, came down, and watch what happened when it came down here. It broke it and came back up to it and went right back down. So very strong levels. You don't get a whole lot of them, but those are I blocks. Those are what those red and green lines are, okay? That green level is an I block. That's what I just discussed. Mini magnets, MMs, are designated by a thin, cream-colored line. They are a price level of price rejection and attraction, meaning the markets will often push off of them and be attracted back to them like a magnet. So they're positive and negative. They attract positive to, and positive also can push away, just like on a magnet, right? And you can always, of course, change colors of plot lines, but these white lines, just like we saw on setup 3, are mini magnets. So you see how it's pushing off of it right there. It's pushing off, gets pulled back to it, pushes off of it again. This one pushes off, and you think the market eventually is going to be pulled back to that. Yes. And then we got more mini magnets here. Here we got a mini magnet, and we have an institutional block. And then we go down here and we see that there is magnets here, and magnets here. Okay, so do everybody see the magnets everywhere? All right, so you got down what the magnets are. Like, and it's not so much you have to understand how the engine works, you just need to know how to drive the car and identify the buttons that you need to use. Okay? Zones of interest, ZOIs. They're price levels that the market likes and has a lot of participation. The market will often return to and chop around these levels. It's often also where you'll see reversals and things like that, or the big setups come off of ZOIs. So ZOI here, a ZOI there, a ZOI there, a ZOI there, a ZOI there. You notice, and watch, it comes down, bounces off of it, comes down, bounces off of that existing ZOI, pulls back to that ZOI, bounces off of that ZOI, comes back right to it, bounces off of it. Okay? So you see a lot of ZOIs. Okay? Paw prints. Y'all ought to know paw prints by now. They're designated by a color, at the orange color or whatever. At the top or bottom of a bar, it helps identify weak price and possibly the end of momentum of the market. Also a great place to trail stops if you're going for longer moves. So the market responds to paw prints a lot like mini magnets. So right there, you see, you got a paw print right there. You got a paw print there. Weakness of market. Going on up, coming down. We got a paw print there, paw print there, paw print there. So check this out. If you were trailing this, that would definitely be a place you'd want to trail your stop to. If you had a short trade here, which we don't on this specific setup, but let's just say you had a short trade, paw print, you could trail, okay? And you could actually use, paws to trail if you wanted to as a way to move your stops down. If you're going for more than, like, once you get past that initial launch, like I said, like you get 10 points and you want to start tightening up, like tighten up. Don't do it right to begin with. You'll just get whipped out. But tighten up. Comes down here, tighten up again, and you would have got most of the move just by trying with paw prints. So pretty cool. Everybody see what paw prints are? Sweet. Okay. So now we got deviation levels. Deviation, these are not standard deviations. People have heard of standard deviation before, right? Like the, 70 percentile expectation move, the standard deviation. Our deviation levels is a formula that I've written, wrote it a long time ago, and it's based on implied volatility. It's based on not how far the market has moved, but it's forward looking. It's derived from implied volatility of option pricing. Okay? So derived from implied volatility, which is an IV, or implied volatility is a fancy word for expected movement. So think about it. Do you think there's a lot more volatility when a 16-year-old boy gets a car and gets behind the wheel versus a 40-year-old driving? Which one is going to have more volatility, the 16-year-old boy or the 40-year-old driver? Not a rhetorical question. Who's going to be a more volatile driver, 16-year-old boy or 40-year-old? Okay. So, if there's more volatility, do you think the insurance company is going to charge the 16-year-old more than the 40-year-old? Or John would say, I'm the 16-year-old. Thank you very much. Yes, I'm a very volatile 16-year-old driver. So they're going to charge them more because they expect more volatility. Well, options cost more when they expect more movement. Like right before earnings, options get more expensive because they expect a big movement from the earnings release. Same thing happens in the market. The option prices of the market get more expensive. And so what I do is I have a mathematical algorithm that pulls out the implied volatility of the options and then ties that into the market putting their money where their mouth is. And it tells us how far we expect the market to move that day. And so those levels are a 0.25 and a 0.5, 0.7, 1, and then we even have like 2 and 3, which is really rare, but it does happen. but they're very strong levels. So, and you'll see like here, these lines right here, these are deviation levels, where it says like -1 dev, -0.7 dev, okay? Deviation levels. And you'll notice that 0.25 can be a very strong one. This is something that a couple of our traders have really picked up on, so we added them in. And look how this thing's just bouncing between settlement and 0.25. Right there. Wouldn't it be nice to know that that was a 0.25 dev and that you could actually use that as a level to play off of when you're trading? So an ICE indicator shows, let's talk about ICE. So next indicator. Everybody understand devs? It's expectations of movement based on options that feeds right into your Ninja from our server. We good there? Okay. I'm just trying to help you understand the parts of the chart. The ICE indicator shows its value area. Have y'all heard of value area before? It's pretty common. I didn't invent it. I did change it to be more accurate based on when market closes. I also made it to where it could actually do it on Forex using futures volume, something nobody else has done. But it's basically just value area. It's where 70% of yesterday's volume occurred. Top and the bottom, and then the center line, the blue line, is where the most volume in that zone happened. So there'll be ICE lines and there'll be a histogram. So let's look at that. So if you look at this right here, this shows you between this blue and red, this is the uppermost of the 70%. This is the lowermost. This is where 70% of the volume occurred the previous day. Okay? This green and red line. And the most volume of the previous day actually happened right here at this level, at this blue level. If we go over here, the previous day before that, 70% of the volume happened between this green area and this red area, and the most volume happened at this price level right here. And we'll often see the markets go up and respond to those levels from the previous day, which are also happening to coincide with 0.25 devs. You'll also see a histogram going out, and this shows you where like there's really high volume nodes. You'll notice yesterday there was a whole lot of volume right at this level, and look where it comes up to and stops. Comes down, comes right back up to that area and stops. Okay? So that's basically volume charted all the way across for you. So pretty simple. Everybody got it? Like it's a level, you can identify it, you get an idea of what that line stands for. Cool. All right, we got Flux Pivots, which are also part of the silver group, and they're dynamic support and resistance levels. So instead of just having pivot levels, these actually can change throughout the day. If you watch the second setup video, I show you how to add Flux Pivots to the 60 and 240 minute charts. I only adjust them at the beginning of my trading day. I don't look at them again after that until the next trading day. Okay, I don't adjust my 60 and 240. I don't give more weight to 60 or 240. Okay, so make sure you watch that second setup video. And you plot those on there, and then we also have them on the diagnostic charts. So again, they're plotting, basically pivots that are constantly moving versus static. And we have them on smaller and larger time frames, like I said, the 60 and 240 that we globally draw onto the chart. So right here, you can see the dynamic ones on the chart. And you can check out how, boom, hits right there, comes off of it. Comes up, hits this level, comes off of it. So y'all can see how these levels can actually become really helpful. And you can easily go through Flux Pivot levels. What I really like about the Flux Pivots is when they highlight something. Like, see, like this one highlights it, and check it out how there's a magnet here, a paw here, a magnet there, and like it helps you really see backwards. Do you see that? That's the real value that I give to the ones on the dynamic, is when I can see them like lining up with multiple other things, not by themselves. And Yeah, they're very, very accurate, and they will really help you see when things line up. Because we, as a trader, we're trading right, but we forget to look left. And so they will really help you learn to look left. Okay? And then we also, again, draw them on the 60-minute charts. So, and I have you globally draw them so they'll plot on your chart. And we do it on 60, and we do it on the 240-minute chart. Now, something else that we've just added to the Sniper Setup Silver level is dynamic volume magnets. And if you upgrade your toolkit now, it is included, and it has the template built in. So let's look at that real quick. You want to check that out? What this is like a dream I had for a long time to actually make this thing happen. Because I used to do it manually. So it was a big process. And let's see here. Let me find my control center, which I think is hiding behind the PowerPoint is the problem. Where are you, control center? Or it's behind the chart. Hold on. No, I want that one. Give me a second. Oh, Ninja's locking up because I got 5,000 things open at once. So hold on a second. We may have to come back to that one if I can't get it to respond right now. Anyways, I'll give you the summary, and then we'll come back to it. I'll do a short video for you, and I'll put it up. How's that sound? Need to do a short video on it anyway. Now we're going to be stuck with that. Let's see here. Hold on. I'm not going to have that little message on top of my... screen for 10 minutes. So 1 second. It's like it's still running in the background, but it's like catching up on something. Oh, it's some like API status message. That's weird. Okay, whatever. So dynamic volume magnets. So what are they? Okay, they're extremely powerful. What they are is it's the literal like third deviation level of high volume bars. Like it's the 3% highest bars that took place in what I do is the last 20 days. And it will automatically plot the levels at where the 3% highest volume happened at those price levels. And I globally draw them. So I'll make a video for you on that, and I'll put it up sometime tomorrow. Okay? Again, I look on 10-minute charts 20 days back. Okay? The only time I go further back in time is when we're like making new lows that we haven't made in the last 20 days, and I have to go further back to get, levels. And like I said, I'll make a bonus video for you. Just not the time to do it. But there is a template in the toolkit. You can go right now into the brand new toolkit that we just uploaded today, and you can go File, New, in Q12, 10-minute chart, 20 days back, and there is a dynamic magnet template in there for you now. And it'll be like space, underscore, underscore, so that would be with all your other sniper stuff. Okay? Now, what about NQ walls? This, if you haven't figured it out already, which most of y'all do know, they are the most powerful levels. This is how we say the market's going here, and it goes right there. We did a whole conference on this called All In, where Lori taught how, she and us come up with these walls. And we used to have to draw them all manually, but we got our programmers to make us an online database where we could type them in and they would automatically draw on your charts. And all you have to do is add the NQ walls indicator into your chart to do that. Okay? There's cyan dotted lines. They can also be some other different levels as well, other different colors, but they'll always extend all the way out to the right. And they are historical levels where big moves start, and markets are highly, highly attracted to these levels. They are the strongest levels. They're based on institutional controlled reversals, TBS power trades. I can get real complex on it. If you want to go watch the all-in course, be my guest, and learn how to do it. But the market respects these levels, and they respect them often, months and months and months, really years upon years. So like, you better be respecting Lori because she's put a lot of hard work into these. So you see these lines that are coming all the way out to the side right here? These are, these cyans, these are walls. Okay, notice Xbox trade coming right off of a wall. Xbox with a trapped order. Comes right back up, goes right to another wall. Xbox with a trapped order. Takes off. Okay? And so you'll learn as you start watching them, you'll be amazed. And that is, when you want to know how do we call it and say where the market's actually going? I've heard people go, I know where the market's not going. Well, that's a lot of use. Go to a high-risk binary. I want to know where the market's going so I can make some actual cash, right? So if we were long on this and we were trying to, I said, Lori, where is this going? Well, she's like, well, first it's going to hit settlement, then it's going to chop around a little bit, then it'll go on up to 82.36. Our next level is going to be 82.43. Like, I mean, you just call it right out like that. And now you actually have those printed on your chart. So breaking through settlement. Where are we going, Lori? Oh, it's going to go ahead and drop on down to about 81.88, right where the level's at. Look at that. Bam, 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 bam. Okay. Game's down, and now support became resistance. All right. An Xbox trade's coming off of it as well. Another Xbox trade right there. Now, can you see all these levels on your own without these Apex tools? Can you see these walls? Can you see these zones, these deviation levels? Can you see these walls? I'm being serious. Can you see these levels on your own? I can't see them on my own. Yeah, it's remember I said, like, without having this would be like driving 70 miles an hour and blindfolding yourself? Well, that's sort of what this chart looks like compared to this chart. Okay? Just naked blind trading. That's what John calls it. So yeah, support and resistance is way too subjective. So this is order-based. This is tick-based information. This is us taking all those numbers and actually making something out of them. So let's talk about putting it all together. What do you do with all these lines on the chart? Because it seems like there's a billion lines and I'm just intimidated, right? So I need to be worried about each and every little line. Anybody ever ask yourself that? Like, should I worry about this one? Should I worry about that one? What should I do? What should I do? Yeah, that comes up, right? A single line is something to be aware of, but it's not a wall. It's not a level, okay? Major walls and levels are made up of multiple lines, and this is the biggest area of confusion on walls and levels. Pay attention, okay? You are looking for the stacks. You are looking for the stacks. This is what everybody gets wrong. You are looking for the stacks. Longer term trends versus scalping. Okay, let's go into this. A single twig you can break, but if you put a whole bunch and bind them together, they're not easily broken, right? Am I right? Is it harder to break this group than it is a single one? Is it harder to break just a mini magnet than it is a mini magnet that has a paw on it, that has another mini magnet that has a ZOI? Yeah, it's a lot easier to break the single mini magnet, okay? Let's put it another way. You can step over a single row of bricks really easily. right? Anybody should be able to step over this. This, not so much. It's a wall of bricks. It's going to have to climb over it. I mean, you can't get over it, but you're going to have to climb over it. All right? It's going to take some work. So let's look at some of this. You know, single brick. Some magnet right there. Went right through it. Okay? Stacked row. You got 2 paws, and you got a 0.25 dev, and you have a cluster. There's a stack. Yeah, 3 paws. Definitely a stack. Single row, stack. Okay? Up here, we got I-zone. We got a mini magnet. We got a paw level. All right there together. That is a stacked wall. Bar comes up, boom, hits the wall, comes back down. Now we form a ZOI. We got a mini magnet, another mini magnet. We actually call this a burger because it's, well, the mini magnets are the bread and the zone is the meat. Comes right back up to it, bam. Comes right back up to it, bam. Okay? So you can call it confluence, but it's stacked walls, which is similar to confluence. Wall level. Look at all these big institutional eye blocks. Boom, boom, boom. And an eye zone. Okay? There's a stack. Here's a single. Hey, no problem. We got a nice little trade off of it. There we go. Go down here. Can't break it. Can't break it. Can't break it. Can't break it. Okay? It's harder to break. So if you're going short, do you want to go short right into a stack if you don't have room to get at least 10 ticks? No. What if you get a long off of a stack? Do you like that? Or buy or sell, like to buy off of it? Yeah, that's good. Often that can turn into a great trade. Okay? I'm not saying they're required. What I'm trying to get you to do is pay attention to the difference between, because people get so confused about every little level, and I'm like, quit obsessing and pay attention to the stacks, because this is where people get confused and mess up. So settlement is a level, and be aware that on settlement things will move around, but usually you'll have other stuff that will line up with it too. Let's see here. And then we go on and we look at this. And we got, 2 mini mags come down here. It hits it. And I mean, you got paws like just sort of coming through. And then all of a sudden they come together. A paw, 1, 2, 3 mini magnets and a ZOI and a deviation level. Boom. Hits it. And that still exists. It didn't just go away. But now we still have 0.25 mini magnet and a ZOI. Comes down, hits it. Comes down, hits it. Comes down, has a new paw, hits it. You see the stack versus just the single level that it broke through? I just want to make sure y'all are getting this, because this is where people get lost on levels. They look at every dang little line and try to give it value and meaning, versus learning to, the value of these levels is learning to look at the stacks. It's their biggest value. Okay? Otherwise, it just looks like a bunch of cluttered crap, to be quite frank, if you don't understand that. Now, with all that being said, the one thing I am going to make you aware of on setup 2, okay? Not setup 1, not setup 3, 4, and 5. On setup 2, if there's like a level before your 10 ticks, just even a single twig, and I can't get my 10 ticks before I get there, then I'm probably not going to take the trade. So like this trade right here, which would have been a setup to a box, an X box with a trapped order. I don't have 10 ticks between here and here. I'm not going to take that one. Now we pull back down. I get another X box with a trapped order. I got 10 ticks. Does that make sense? And that's for setup 2. And notice I'm talking about 10 ticks versus 10 points. We're going for those bigger moves like on 3, 4, 5. We're not worried about twigs. We're not worried about bricks. We're worried about walls. And we also expect the market to be attracted to those walls. Is this coming together for you? Like I'm hoping I'm bringing some clarity to you on all the lines and levels where you don't feel like you get stuck in analysis paralysis, second guessing every single trade. Some of y'all are getting it. Some of y'all are really getting it. Some of y'all are like, I'm getting there. All right, because I mean, I've tried so hard with this course to not make it complex. And Lori and John have sort of helped keep me accountable in that process. And so that's why I was like, okay, setup 2, I want to talk about this one piece. Good. And if you're in the room, you'll get there a lot faster. So, I mean, we've got a lot of positive feedback in the room. By the way, keep staying on because we are giving away a free year of silver here in a minute. Divergence. When the price of an asset is moving in the opposite momentum, in opposition to momentum and volume. So we talked about this last week, where it can show, exhaustion, pause, retrace, reversals, marathon. Like you're on a marathon, you're running uphill, but you're running out of steam every time you keep going up another hill. Okay? And essentially make it really simple. When the market goes further on less momentum, it's more likely to reverse. So I just want to do a little review. Price goes further, volume and momentum are less. Higher highs on less. Lower lows on less. DR or deviation reversal, that's the little green and red indicator at the bottom. Or OD, those are the big numbers that print, oscillation detector. So we know divergence is really powerful for showing exhaustion and weakness. And so I want you to notice as this market is dropping, notice how the DR is showing more, and it's dropping, it's showing more, it's dropping, it's showing more. Like that is momentum. It's going further down. That's confluence. That's saying, yeah, this thing's continuing. Okay? But we go over here and check this out. Market goes higher, and right there we got 20,000 versus 7,000 versus 2,000 on less volume. We also look over here, it went higher, and then all of a sudden it dipped down, and it went up a little bit and dipped down. It's like it had like a big hill and then a little hill. But this thing kept going up. That's DR divergence. Went up, big hill, and then it went further, but little hill. That's divergence. So we had divergence. Not only did we have it up here on oscillation detector, these big numbers you see printed at the swing points, we also had it on the deviation reversal detector. This is like my deviation levels, but this is intraday deviations. So happening live. So this can really help you see, like when there's a divergence, and look, we get an X box with a trapped order. That now lets me go counter trend. We're going long. We get an X box with a trapped order. I got divergence on OD and I got divergence on DR. Now I can go counter trend. Okay, and that's when we get to go counter trend. Hey Ben, can you check your Skype, please? Does that make divergence make a little more sense for y'all? The horizontal lines are for a different system of how far it has to break. So you don't really have to worry about them. So, okay, so the market went higher, like the market went up here, right? And we got 20,000 in volume in this trend, right? And then we got 7,000 in this trend, and we only got 2,000 in this trend. So see, that's 20,000, 7,000, 2,000. So you all see how it's going higher and higher and higher on less volume? Does everybody see that? Should the market keep going higher on less volume? Or do you think that's, I'm in a marathon, I'm running, and then I go up the next hill, and now I'm getting tired. Now I'm getting tired, more tired, and then I fall. Okay? So I started off on the marathon, and I was going full pace, full speed. And then I went downhill running, and then all of a sudden I went back up the next hill, not quite as much speed. And I went downhill, went up in the next hill, really losing it. I'm completely exhausted. Okay? That is divergence. It's going further on less steam. Is it making more sense? Just like if you were physically running. All right. Now, we sort of got the opposite happening down here, okay? So I'm running uphill, and it goes down, and then I'm running up again. Well, see, this is your steam meter right here. So I'm going full steam, but instead of having a number, a little histogram. And it gets a little weak, and I come down a little bit right there, and then I go back up and make a new high, and I lose my steam again. And I didn't have as much steam here as I did here. So running up, losing steam. Running up, losing steam. So whether it be on DR or whether it be on OD, that's divergence. It means expect the market to reverse or pull back. And we get a X box with a trapped order right there. On less steam, take it against the trend. We got an X box on a trapped order right there. We got OD divergence, and we got less steam on DR. Take it and go short. Most traders lose money because they go counter trend, because they don't know when the market is running out of steam to know when they should actually fade the market. They just are going, it can't go any further than this. I have a level. Well, what does the order say? Does it have energy? Is this coming better, a little better together than last week? I know some of y'all got confused. Good. I hope so. That's why I want to do a little review of this today. So we want to stack the odds. Gambler player, gut emotion, no real system, doesn't know how to read the table, doesn't have good risk management, gambling, or a dealer. They have levels. They have divergence. They're doing sniper trades. They're very focused. They're stacking them all in one. They're putting everything together to have the edge and the probabilities in their favor. And I think the results can speak for themselves. Like I said, we have 38 out of 38 trades in the last 7 days that were profitable. We called in the room. Yeah, I mean, there's another example of divergence happening right here. You got 21,000 up to 15,000 right there. It's going further on less steam. Get an X box with trapped order, fade the market. And then we got this little heel going up, and then it gets down, and then a little weaker, less momentum. It drops. And you think a sniper, they put it all together, right? Not only do they have a target, but they know what the temperature is. They know what the wind is. They know the weight of their bullet, right? They know everything that's going to impact, what the heat of the sun may actually, everything that can impact their shot. And so you become more like a sniper as you're able to put these things together. But our goal is to make that really simple for you, which is where order prints and levels and then the stacked walls come together. Yeah, I don't care if they're white or yellow or black. As far as OD is concerned or otherwise, we compare them, to each other for the OD. So y'all are messing with me. All right. Sign up potential continuation of a trend. Hidden divergence. Okay. This is the opposite of divergence. It basically tells you when the market's going to keep going. Divergence is more on less. Hidden divergence is less on more. So let's look at what I mean by that. It's basically more volume, more momentum. It's like I'm getting my second wind. I'm getting my third wind. Okay. So the market over here is going down, and we got more volume, 3,800, and then 8,400. Like it's just, and then we got an Xbox right there. Right? So, and we got another Xbox right there. So that just gives you confirmation, that gives you confidence to enter that Xbox trade. Because the market is like, I'm just getting started. Okay? And if you look at the top side here, which is a little bit different than the bottom side for reversals, you notice how it goes from 3,000 to 7,000 to 8,000. By the way, it went from 1,700 to 3,000 to 7,000 to 8,000. It's like, yeah, let's go. Oh, I'm come on, bring it. Come on, bring it again. Let's go again. And it's just adding confirmation to that Xbox with trapped orders. Y'all get it? Like just getting started versus running out of steam. One of them telling you it's going to keep going. One of them telling you it's going to go the other way. A trapped order is, don't worry about understanding how to take apart the engine. It's the blue block inside of the Xbox. So hidden divergence, pullback, turned to 4 times the volume, but did not reach beyond it. So we got 300 and 1,400. Got an Xbox with a trapped order. Okay, because this almost looks sort of like a trend reversing right here, but that number right there tells me this thing is going to keep going because it's picking up steam. Boom, let's go again. So it has a lot more steam than that last up pull, and that had more steam than that up pull. So boom, boom. And also we had a star, low volume score, Xbox, trapped order. I mean, let's go for it. Okay? And where do we go down to? Where we start getting some stacked up stuff down here. All right. Hopefully y'all are picking up what I'm putting down. Another hidden divergence. We got 1,400. We're going up 1,800. 6,300. It's not done. That gives me confidence on that triple dipper to keep going. Right? The triple dipper right there. We're above 75%. Yeah, let's take it. Let's go for it. Market's saying it isn't done yet. And notice I'm looking at the opposite side. And it's at a stacked level. Look at this. We got settlement. We got paw prints. We got all this stuff going on. And we get an entry. Putting it all together. Trying to give you all a second to absorb. So we've taught the individual pieces. We'll keep teaching more. We're going to do a big order prints webinar next week. Okay. I'm going into reading the markets. But now you're learning how to actually combine stuff, put it together. You're learning how to take your trading to the next level. You're learning how to become the sniper, not the target. You're learning that without the Apex tools, you're really trading blind. I mean, can you really see yourself pressing a button to enter a trade without these tools? Like, do you want to do that anymore? Once you've done that, once you've seen the results you just had in the past, say, week. So, again, highway blindfolded. So, exactly. I mean, y'all are all on the same page. So, and this is the next level. This is very powerful, and I want to challenge you to share it with your friends. I'm hoping that y'all will not only have enough confidence now to place your own trades, but you actually have enough confidence to say, hey, you should actually check this out. And we are actually giving away a silver annual membership to those who are sharing. our post and liking our post and commenting on our post. And so I wanted to go ahead and make that announcement. I want to thank everybody who put effort in on it. And this award, being one of our users, again, they're going to get a free silver annual membership, which we charge $2,000 for. So drum roll. I don't have my drumsticks, but is Blackadder Hayes. So Blackadder Hayes has been very active on our Facebook page. He has shared like crazy. He has commented. He has posted. And he just got a free year of silver annual elite at zero cost. Pretty cool. Now, and by the way, I activated that for him right before the webinar. We're going to give away another one in 2 weeks. And we're going to give away a lifetime as well. Okay? So how would y'all like to know how to get entered in that contest? Because it's really simple. Would you like to win a free year? And by the way, if you end up buying during like our Thanksgiving promo for Black Friday week and you win, we'll refund the money right back to you. Okay? Because we are having a big Black Friday promo starting Monday. So, if you want to know how to win a lifetime membership, you got to join our Facebook group. Okay? And all you do is join it. That gives you one entry. Okay? And then invite people to join the group. And anybody else who likes it. So the futures, I think now says forks in because Nadex won't, or Facebook won't let us fix the typo for like 20 more days. But right here's our Facebook group. You join that, and you can invite friends to like the group. Invite members like right down here. You can invite people to it. Okay. And for everybody you invite that accepts, that's another entry into a lifetime membership, which it costs $4,000. Okay. Now, if you just go to our Facebook page, we're also so we're giving away a lifetime, but we're also giving a 1 year membership. Okay? So our Facebook page, let's see here, just go in and type in ApexInvesting. One, like the page. Okay? That gets you in. 2, every time you like a post, and we have memes and all sorts of posts and all that, just start scrolling down. Like a post, share a post, or tag a friend in a post, okay? Every time you like, share, or tag a friend, that's another entry, because we can go back in the back end and we can see all the activity and who's doing it. So if you like it, if you tag a friend in it, or if you share it, if you did all 3 on one post, that's 3 entries. If you did it on 2 posts, that's 6 entries. Okay? And then another way is if y'all are, having fun and you're doing well, hop over to our forum at forum.apexinvesting.com, and this will get you another entry. And we have an area called You Can Do This and Why You Should. And just post a topic and just say, how are you doing? And we'll give you another entry on top of it. Okay, so all you got to do is like post, comment somebody's name, share a post. You can literally get hundreds of them. We have tons of memes. And we put up more and more. And some of them are actually pretty funny. So, but I was like, some of you think you don't need to be in the elite room. None of my business. Exhaustion and a paw before I had my first cup. We got SpongeBob. We got The Rock. We got just about everybody. So Ancient Aliens, Invented Order Prints. So, but anyway, so we put those up there. It makes it easy for you to share. And if y'all have any questions about the contest, let us know, but it's pretty simple. Y'all like that? In 2 weeks, we'll announce the next winner. Okay? And why are we doing that? Because it's a lot cheaper for us to give you free access for referring people than it is for us to pay a whole lot for advertising. And I don't think that you're going to refer us to people unless you believe in the product anyway. So, yeah, like, share, tag, everything. The more you do, the more chances you get. All right? So complete the training course. Be in the elite room. Demo trade. Get going live. Fund your account. By the way, check out our Nadex signals. We haven't had a losing day this month. And we have the live stats right on the signals page. We want you to be profitable as soon as possible. So start to look at these pieces. Start to put them together. Sign up for Thursday's webinar if you haven't already. All the webinars are on the Bootcamp page when you sign in on the Sniper page. By the way, reserve your spot. We have 770 people already signed up for Bootcamp. These webinars are getting very, very full. Okay? And GoToWebinar only lets us put 1,000 people in one webinar. So you do want to go ahead and grab your spot. I will see you in the elite room in the morning. And I want to thank everybody for their time this evening. And I hope y'all have a great night and a great morning tomorrow. Our Nadex signals, just hop on our homepage at ApexInvesting.com. Scroll down a little bit past Bootcamp, and you'll see Nadex signals. And you click there, and it shows it. If y'all did not get any of your questions answered, okay, I want you to either hop on. I hope you got them all answered. But if you didn't, hop on our website at ApexInvesting.com, and you can submit a chat. And either we'll get to it now, or we may go to sleep and get to it in the morning. But if you have any questions that are not answered, I want to know. And again, I'm calling everybody personally, so if I actually call you, you may get a voicemail if we're just sending out an update. But it's sort of funny. Some people are like, is this really Daryl? And I'm like, no, this is a robot. They're like, But I'm actually trying to call and get a hold of everybody. And if you want to talk to me, give me a call. I'm here, okay? Don't give me a call in the morning because I'll be in the room. But after about noon, I'm usually available for phone calls, okay? So I hope you all, again, have a great, great evening, and I'll see you tomorrow morning. Thank you so much for your time on the webinar and for trusting us to help you accomplish your goals and dreams.